This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In today's video, I'll be going over the datasets, the earnings, and going over the technical analysis for the SPY for February 3rd, 2026. And with that said, let's go ahead and jump straight into the datasets. Now, I still have not fully completed the notes. I apologize. Just It's been an extremely busy week. I'm running on pretty much no sleep right now, so I do apologize if I sound tired and everything else, but going ahead and getting into the video, we had the ISM manufacturing side of the dataset come out today. The non-manufacturing side comes out on Wednesday, but we had the ISM data come out fairly strong today. It wasn't super strong, but some of these actually pulled back up above the declining phase, which is that 50 point. Once it starts climbing above that 50 point, that's showing growth in whatever data set that is. So this is currently showing slight growth within the manufacturing PMI. So take that for what it is. Same with the manufacturing employment rate here, seeing a very slight increase compared to the previous being at 44.8 and the forecast expecting it to come in at 46. A lot of this data came in very elevated. So that's that. Um, the Atlanta Fed GDP came in again at 4.2%. We weren't really anticipating anything too crazy happening with that since we know that there was a bank failure over the weekend, I believe, and that's what I'm really thinking caused the GDP now to pull down last week. I can be incorrect about that, but that's just my theory on it so far. Now going over Tuesday. Tuesday again, we don't have a lot of data, but it's still an extremely important day as we do have the JOLTS job openings for December. Now, I did get a message on the group somewhere where we're not getting a certain set of employment data this week. I believe it's something on Friday. I have to confirm that though. Um, but just keep your minds open about that. Is that apparently we may not be getting one of the sets of data that we were originally supposed to because of the previous shutdown. So um that's that. Now, what else? For Wednesday, um really again not expecting a whole lot. We have the ADP non-farm employment change for January. Now again, this isn't the week over week or the weekly data set. This is the monthly one. So they're forecasting 48,000. This is still very low. As I stated in my past videos, this needs to be a lot closer to about 180 to 250,000-ish jobs being created. So still very low. We're still seeing labor market issues, even though we do see a little bit of an increase in the ISM manufacturing employment for January. Um, I'm interested to see Wednesday's ISM non-manufacturing employment data, as these still have been fairly weak, and it will be interesting to see if these will stay fairly weak or if it will follow the manufacturing side and actually see a little bit of elevation from that. And that's the data, so let's go ahead and jump into the earnings. Now for Monday, we had Palantir. I believe they did good. I think they're up around 7% right now in the overnight, something like that. Looks like they did fine on their revenue and EPS, so that's good. Now for tomorrow, Tuesday, we have AMD, which really that's the big one we have to worry about, or not worry about, depends on how you view it. Uh, SMCI, another big company, but it's not a semiconductor producer like AMD is. Much different company. So this is just a major tech. This is a mini NVIDIA. So I talked about that in last night's video, how AMD is the type of company to suddenly pull some absurd multi-hundred billion dollar deal out of nowhere if there's any company on this roster that's going to do that, it will be AMD. So just be prepared for that. If you're trying to actively short it right now or something, I would just, you know, advise caution on that because I this is something I would not want to short unless it's shorting just purely off technicals. For example, shorting an upper Bollinger move, something like that. But shorting into the earnings is not what I would find ideal. I don't think the risk on it is good, because majority of those calls are being sold at a very high IV anyway. Because most of those call holders are expecting, uh, they do expect a good earnings, but they expect to profit on those calls in the end, or have those calls burn basically, to where the the people buying those calls are basically buying extremely elevated IV calls where the IV drops off, and potentially they run in the money, potentially they don't. Um, it's just a mess. I don't really suggest it too much, but I know many people do really enjoy playing earnings, so that's that. Enough of my rant. Um, yeah, AMD, very, very important for the market. It can absolutely pull the market down, or it can absolutely cause the market to skyrocket. Now, seeing the price action today, throughout semiconductors, throughout tech, QQQ, SPY, any other signals, so far they're pricing in AMD to look like it's going to do very, very well, and pretty much that the market's going to break out to all-time highs. So yeah, let's go ahead and jump straight into the technicals.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And getting into tonight's technical analysis, excuse me, I can't talk. You see this massive scam candle. Something happened where there must have been a single shared order of SPY sold for $69.01. Um, this was not the price action today, obviously. So you can skip that candle for the most part, and I'm sure Webull will fix that to where we don't have this glaringly massive downside candle because it doesn't really reflect what's currently going on. Um, what's currently going on? So today we did have a bounce upward. We talked about in the video last night how even though I was very, very bullish, I was expecting this bounce very, very much. I made that extremely clear. We still had the potential of having a massive sell down and kind of having the moving average collapse happen again. Now, with this bounce, that really does change a lot. That's going to pull the 5 mont up even further. Now, based on where the 5 mont is currently on your screen, it will show a different level, but on mine, it shows 694.47. And what I wrote on the screen for your guys is that it should open around that 694.80. So even though it's not going to be pulling up a ton, it's still going to be pulling up a little bit. So overall, aside from actually seeing the price being massively green, it's a bullish close where we're going to continue seeing the 5 mile pulling upward. With that happening, we're going to start seeing the 10 mile pulling above the 20 mile. Now, this is going to start creating that range where we have the 5 mile above the 10 mile well above the 20 mile. It's not there yet, but it will build to that point if we get the type of buying that I'm assuming we're going to. And I really, really do anticipate it because even in the overnight right now, um, the current price is at 697.27. So we're already almost at all-time highs just in the overnight, and Um, yeah, I don't know what to say about that other than that's screaming for really one thing to happen. Well, two different things can happen here. One is that essentially the price is right here. Basically right there is where the price is at. So with that said, with the 5 mile pulling up just very slightly tomorrow, that's going to pull the upper Bollinger above the $700 range. And what that means overall is that the market is now going to be making an active choice between, are we going to retest the 5 mile or are we going to basically rush straight up to the upper Bollinger? Now, a 5 mile retest makes a lot of sense here. After we did have a little bit of selling, heading down well below the 10 mile and 20 mile levels, almost down to that lower Bollinger again, but we did manage to avoid it. This scam candle really does not help us right now at all, but we saw that bounce from, below the 20 mile, below the 10 mile, and now we're above the 5 mile again. So this is starting to tell me that, in the grand scheme of things, that the previous bullish structures we were looking for are starting to play out very, very, very well. And I want to turn on the drawings, but I also want to turn on the Bollinger because it's easier to line up with the drawings here. So we saw the potential of this head and shoulders starting to build for a few weeks now. Um, I don't want to say a few weeks, about a week and a half. And we did discuss how there was some smaller bearish structures in here. Sorry, I'm trying to think while doing this. There were some smaller bearish structures in here that could push the SPY down further. However, I want to make sure this channel is aligned correctly. And with that said, now having the Bollingers and everything in sight, closing this cup back up to the upside and remembering that the price is currently, we're going to do a horizontal ray, make it green. Yeah, so it's about right there currently in the overnight. So if you were to ask me if this was a bullish cup, um, yes, it looks extremely bullish. Basically, the exact price action we were looking for occurred. We saw the bounce out of that very, very dangerous liquidity zone. Not only just one of them, but both of them, both the red one, the yellow one, building support above that range and seeing a double bottom into a bounce. And not just a bounce, but it entirely filled this entire selling side back up to the upside. So are we really poised for another 5 mile move downward before pushing up? We could be, but I think the market's getting really ready to send this thing to 700. Um, Looking on the daily as well, just turning off Bollingers and everything, the ADL has been soaring. And if you remember last night's video, or one of the many times I've said it throughout the many years now, is that the ADL is a very, very quality lie detector because it will tell you pretty much exactly where the money is flowing. If there's money piling into this, but you see downside, there is something incorrect there because money's being piled in. That should lead to upside price action. So obviously, the ADL can have some disparities from the whole derivative aspect of the market, but overall, you're understanding what I'm saying is that if there's money flowing into this, very likely we're going to see upside. And the ADL has been telling us that for the last few sessions now. Even though we were seeing very, very scary downside potentially, the ADL kept picking up and picking up and picking up. And it wasn't just SPY as the outlier, we were seeing it on, the HIG, we were seeing it on QQQ, we were seeing it on, just multiple different symbols. So it looked very good. I think that now we're going to see the full continuation of this structure, and this cup would actually look a little better. I should probably draw it a little better now. Um, Now that we're actually seeing the bounce, and I will head down to the hourly time frame just to kind of show this slightly better. And you can see with today's price action, we formed a small cup here. With this small cup forming here, we can potentially have that 5 mile test, which I talked about, which would pull us to the 5 mile, retest that level, and then with a successful retest, we would then be at all-time highs because that's going to push us right into the upper Bollinger. So it looks very good if you have, or if we have downside in the morning at that 5 mile range. I will be buying the absolute heck out of it because that's a very, very easy and clean move to the upside. Um, Something else I want to show before I end the video because I really wanted tonight's video to be fairly short. What else do we got? There's the QQQ scam candle. Also incorrect. Um, was on the VVIX, and we talked about this. How once we start challenging, and I want to show the 4 hour time frame. Once we start challenging back into this yellow range, that's going to really taper off a lot of the selling. A lot of that selling is going to not cease, but you're going to see the VIX start to drop once we enter this yellow range. Um, I do believe that's going to occur very, very likely tomorrow. And one thing about this yellow range is generally we don't tend to stay in this yellow range for too long. It is a major consolidation area, but it's a consolidation area between major trends. So unless we're going to chop in between a bullish and a bearish trend again, then I'm really anticipating us to kind of just fly through the zone and pull back into the green again. Um, that's what I'm looking at for the VVIX, but for the VIX itself, remember I talked about how if it's below this $20 range overall, that's really suggesting that there is bullishness within the overall tech market. Again, this can shift very, very quickly. We can have a vol spike happen very, very quickly. But to me, this previous action that we saw that spiked the vol up to 20, um, was rejected very quickly. We saw a spike up back to that level almost, rejected very quickly. Can this absolutely spike back upward towards that 28 range and start filling some cups upward? Yes, it can, but I'm not seeing the signals just yet. And I know that starting tomorrow, um, I'm going to be opening a pretty long-term short position within the UVXY, which is the it's the Ultra VIX short-term futures. I think it's a 1.5% leveraged fund, something like that. It doesn't matter. It tracks the VIX and it's going to cover the contract premium a lot better than a standard VIX contract. So what I'm thinking about is probably something for April price 34. Those 42s right there look a little expensive, but I think it could be worth it. Um, I would be looking at UVIX as well, but the thing about UVIX is it is currently at $5.33. So it is starting to enter that territory where they can do a reverse split. And if they do a reverse split, it's going to absolutely kind of butcher up the contracts. So I'm not too down for that right now. But um what am I trying to say here? Is that if we could get some nice contracts, which is June 26th or June 18th, 2026 look pretty nice. Even the $5 puts are pretty nice here. They're about 100 and I want to say 162-ish dollars, give or take. Oh yeah, that's mid price. Okay, I nailed it. Yeah, $162-ish, give or take, on the mid price. So that gives you all the way till June, um, to catch an upside in the market. Um, I think it's good. I think it's a good deal. I am very likely going to load up on those tomorrow. So we'll see. I'll talk about it, but I'm almost certain that's the contract I want. It's speaking to me. So, um, I like it. I think I want to take it tomorrow. But that'll give me a whole 136 days out of coverage to the bullish upside. Remember, shorting the VIX in any sort of way means that you're going, basically long in terms of being bullish. You're shorting the volatility, so you're expecting volatility to start dropping down. Um, Granted, we do have a lot of volatility bearing events that can still pop up. We still have the yen that is still fairly elevated, or the USD JPY that's still very elevated. We still have some tightness and stickiness within the treasury yields. There's just a lot of different issues that definitely can spur um the selling and the volatility to pick back up. But I think in the long run, I think that we're really exiting some of that range. If you remember about a month and a half ago, whenever the volatility actually started to pick back up again, it was really when there was the threat of tariffs starting up, potentially against some country or another. Sorry, this candle's absolutely making things difficult. But that's all it was. And after that threat was issued, we bought the dip and have been doing super well since. So, it's hard for me to take that as this is getting ready to drop off a face of a cliff. We no longer have any real tariff threats going out. We have um potentially a lot of good earnings coming out pretty soon. We have volatility starting to drop. We have the high yield credit market still pretty much, on all cylinders, still saying that, tech's a go. So I'm not seeing weakness. I'm really not. Now, with Bitcoin, I did want to cover this in last night's video, but fortunately I did not. Now, we did start entering Bitcoin around the 47,800 range. I say that weird, 74,800. That's when I started buying some Bitcoin, just a little bit. Um, I do want to definitely jump into a lot more. I need to look at iBit, for example. That's the BlackRock Bitcoin Fund ETF. Um, there's BTCG. There's all sorts of different Bitcoin treasury funds, but you want to make sure to get some proper coverage over multiple different funds so that if Bitcoin's actually catching the bounce that I think it's catching, then you will be able to really profit from it without risking everything into a single ETF. Now, with Bitcoin, yes, there's still some major bearishness that can be had. Okay, and I know the drawings are a mess right now, but we've been anticipating this for a long time now, and because of that, we knew exactly when we wanted to buy, and when our level hit, we knew to enter. Now, with that level hitting, this is also a day two Bollinger or a lower Bollinger move, which mechanically means that's generally when you enter regardless. So this for me is kind of a no-brainer. Now I'm looking for this bullish structure, whether this is truly a bearish structure continuing downward past the 74,000 range, then we will see some bullish structure built first to help build further bearish structure to push us downward further. Um, in grand scheme of things, I do think that this liquidity has been hit. It can dig a little deeper. Is that something I'm super concerned with at this point? Not really. Um, the structure has been completed. Okay. Now with the structure completed, this is really the next step is starting that bowl structure to start building that handle upward. And the reason for that is if this is going to be a bearish structure to continue downward, then they want to stay within this selling channel. And let me go to the weekly time frame. I've been charting Bitcoin for a long time now. I've been trading for a long time now. I know a lot about what I'm talking about. Um, anyway, within this selling channel, they do want to see some more upside, okay? Because they want to start climbing back up to the top of this selling channel. If this is going to be the bearish structures that everybody thinks it is, they're going to want to climb back up to the blue channel, build more liquidity, and then pull down again, okay? Whether it's another large inverse cup, whether it's a head and shoulders, it will have to do something, but it can't be this structure. Okay, this structure has already been completed. There might be slightly more to the bottom of the structure before it starts building the bull structure to fully break out, but this structure has been fully completed. So now we need to really start looking for the next one. And really that's where I'm expecting this bullish structure at the bottom to start building and creating that next structure. And whether that structure is, hold on, pulling back up kind of like this and then heading downward to push lower lows, or it's starting to do that and then it finding bullishness and then starting to close some of these gaps to the upside, which that's generally how a lot of these bullish structures build back out again. They just start closing a lot of the previous selling gaps. So likely that's what I'm thinking is going to be happening. However, we still have a lot of different conditions that can cause Bitcoin to continue heading downward as we are still seeing precious metals holding weight. We are still seeing the DXY fairly elevated. Really, the DXY needs to be pulling down towards the 92 range. With it being above this 96 range, it's still basically in that elevated range where if it starts pulling to 98, 99, 100, it starts becoming really, really heavy for other countries and it starts really messing up a lot of the spreads. And yeah, that's not something we want to see right now. What else? I think that's it. So, going to end the video here. I hope you all enjoyed. Trade safe tomorrow, and thank you for watching. Thank you for subscribing, and I will talk to you in the next video. Care, everybody.